Good morning, good afternoon, good evening, wherever you are. Whenever you are listening, thank you for joining me for another video. As always, a free way you can support this channel is to smash up that like button and subscribe to the channel if you haven't already. All right, let's get this out of the way. Am I bearish on Bitcoin right now? No, I'm not. But if you compare where I was short to medium term a month ago versus now, I guess you could define that as bearish. And so let me just describe, I am on record saying that we are hitting $200,000 this year with Bitcoin. That opinion has not changed. It will not change until December 31st, 2021, when the clock strikes midnight. If we're not at $200,000 by that point, then I will be convinced. But until then, we are hitting at least $200,000 for Bitcoin this year. It's just what's going to happen is, in my opinion, things have changed a little bit. So let me explain myself. 50 days ago, I thought we were on a certain trajectory. And we've been flat since then, and it seems to me that we are looking a lot more like 2017 than 2013, day by day. Okay, so what do I mean by that? First of all, Ecoinometrics. Follow them on Twitter if you haven't yet. I love looking at this. I look at this every day, and I just see where are we in comparison to 2013 and 2017. So let's just take a look at this. First of all, let me explain this to you. You see this blue line in the middle of this projection here. Not a projection, it's simply an estimate of if we were to look anything like 2013 or 2017, this is where we would be, according to this chart. And so the blue line here is kind of like the average of the in-between. The blue line is the in-between of 2013 and 2017, post-halving. All right, and then you see the extremes here. This is 2013, where this light blue section ends. That's 2013. The light blue on the bottom here is 2017, and so this middle here, there's just this blue thing, the blue mass here is essentially, if we were between 2013 and 2017, this is where we would be. Now, sometime in December, up until December, this was looking exactly like 2017. But sometime in December, we broke through that, and we were looking more and more like 2013, which, if you remember, 2013 had a blow-off double top. They had a huge peak early on in 2013, and then it crashed. It went down something like 70%, and then it bounced back up to $1,000 and then crashed after that. 2017 just had one big peak and then a crash after that. So it was looking to me like we were closer to 2013, not as extreme with the blow-off double top, but that we were going to have a fake out. That we were going to see some kind of massive acceleration throughout April and May, that maybe we would hit $100,000 and then have something like some kind of major correction that would cause all of us to look around and think, was that it? Is the bull market over? And then it would just be a fake out, and we would shoot up like crazy after that. But my opinion has changed based on the action of essentially the last 50 days, maybe a little bit more than that. It seems to me like this is going to look more like 2017, that we're going to have a run-up and then corrections along the way, corrections as much as 30%, but more so like 25% corrections along the way to this peak. But it's just going to be slowly but surely, and then we'll hit this peak, and that'll be it. Now, we're not going to have, by no means do I think, we are going to have a kind of crash like we did in 2017. I think with the heavy institutional investment that's happening right now, that they're hodling. That they wouldn't have an incentive to buy and sell and to flip this stuff and to try to time the peaks, but that they have an incentive to hodl. Michael Saylor at MicroStrategy is hodling. He is a Bitcoin purist. Okay, and I know that a lot of other institutions are following his lead. So, other things that are making me think this as well. Plan B, the stock to flow. If you don't know what stock to flow is, the Bitcoin stock to flow, the stock to flow model, the stock to flow X model, really, really important that you look into it. And if I can make a recommendation, I'm just going to see if this will show up on my screen here. Yeah, the Bitcoin Standard explains in general what stock to flow is, and it compares the silver stock to flow versus the gold stock to flow versus the Bitcoin stock to flow. Take a look at this book. I've had it for a few months now. It's been a long time coming, and it's an excellent book, an excellent resource, as unbiased as you could be, and especially unbiased if you compare it to crypto Twitter, the Bitcoin purists and everything. So look at stock to flow here. This is the S2F X model, which predicts a $288,000 Bitcoin leveling off. The original stock to flow model predicts a $100,000 Bitcoin that it would level off there, which means for sure that it could shoot past that and hit $200,000 and then come down below $100,000 and level off at $100,000 over the next 4 years. This one is saying that we're leveling off at $288,000, so we could blow past that, hit $500,000 and level off at 288 over the years. So look at this is the most recent updated S2FX model. It's like we were on a trajectory, a clear trajectory to get to $288,000, and then boop, it just kind of, we've run out of steam. I've talked about the volume. The volume is low. We're just kind of waiting right now. The institutions, the smart money, up until about $60,000, they were pouring it in. And then all of a sudden, there's just been a little bit of a pullback. And it seems to me like the thing that's going to, as we're inching up more and more, maybe, $70,000 in April, 80,000 in May. I really thought that we were going to blow past $100,000 in April. I don't think that anymore. May, etc., that we're just inching up, that the buzz is going to keep on growing, and then retail, the dumb money, me and you, not that we're dumb, but retail is going to get on this pretty heavy, and that's the thing that's going to drive it up. So that little sideways thing right there, I'm wondering if it's just going to be like a little bit higher, a little bit higher, a little bit higher, a little bit higher if you're following my mouse, and then whoop, all the way up, just like 2017. Another thing, this is right here, MVRV score. Learn this, know it, love it. This is your thing. Right now, this is my primary metric for determining when we're at local tops, when we're at peaks, and it's phenomenal. It's so accurate. And so I have used this in the past. Look up my previous videos. I called it. Okay, those of you who have been watching my channel for a while, I predicted $60,000 for Bitcoin, or at $60,000 that it would correct to $45,000. And then what happened? This was middle to late February. It went up to $58,000. And then it corrected to $43,000. So instead of 60 to 45, it went 58 to 43. I mean, I can't be all that much more accurate than that. And so what I'm seeing with MVRV score, look at 2013 again, blow off double top. It went up to 200 something, 235, went down to 70. This right here, if you're following my mouse, that was that point where the MVRV score got too hot, and then it went all the way down. And then again, $1,000, $1,300, something like, no, $1,100 in November of 23. MVRV score, this called it within a week, and that was the peak. November 29th, 2013, and then it went all the way down. So I thought, here's what I thought. I thought we were going to have another double peak here. By all means, it was looking like it was going in that direction. But it seems like we're just content hovering within this range between 4 and 7. That seems to be the case right now. And again, 2017, it seemed like we were content hovering between 3 and 6 of an MVRV score. And it just, that seems to me to be the trajectory until we see this massive peak here. So what is that going to look like? I don't know, but here's the deal, guys. Let's say that Bitcoin in June is around $85,000. We're looking at gains of about 25% from where we are now. And so I am acting differently right now with my investments. I am looking for short-term gains. I am satisfied with the amount of Bitcoin and Ethereum that I own. And Ethereum seems to just be tracking with Bitcoin. So I expect similar performance with Ethereum. I expect a lot of the action to be on the back end of this. And so right now, I am looking for more aggressive gains. I'm actually, forgive me, I'm decreasing my Bitcoin and Ethereum position right now. And so I was about, like a month ago, I was about 80% in Bitcoin and Ethereum. That is shifting to where I'm hoping to be about 50% in Bitcoin and Ethereum, and 50% in things that I think will get me better short-term gains. And so what am I looking at right now? Maker, if you follow Maker seems like it's poised to break out big time right now. Matic has had a Polygon, by the way. Matic has had a pretty heavy consolidation, and it is now looking like it's about to break out again. I mean, there's so many of them. Theta is consolidating. I think you have some time on Theta before another breakout, but I would encourage you to look into Theta and get into that. But here's where I'm focusing a lot of my energy right now is you can see I'm on Trust Wallet, I'm on PancakeSwap. This website, yieldwatch.net, basically shows the things that I'm in. I have some farms here. I'm not too excited about these farms, to be completely honest with you, because of impermanent loss. I've talked about that before, but here's where I'm pretty heavy right now, and I'm thinking I'm probably gonna double this position. So I have $24,000 in the Pancake token, and that $24,000, it's staked at a 102% yield right now. So if I were to just hold let's just say the Cake token was static, which I don't think it will be. I think I'm going to see phenomenal returns on this token. But let's just say it stayed it's about $23 a token right now. In a year from now, I would be at about $48,000 in my Cake token. But everything that I'm yielding, I'm just putting back into it. So really, I would probably be at about $60,000 worth of Cake. That's the big thing that I've gotten into lately. I really, really love platforms. Binance, BNB, Cake, Celsius, Crow. Those are things that I really think would be worth putting your money into, because you have to buy Binance if you want to own Cake, and you have to buy Cake if you want to own these other things. You have to buy Celsius if you want to own other things. You have to get in on that. And so that's why Binance, I'm so much more bullish on Binance in the short to medium term than I am on Bitcoin and Ethereum. And so do your research, guys, on these altcoins that will get you better than a 25% return over these next few months. You could easily hit a 5x or a 10x on some other coins right now. And that's just not going to happen in the next 3 months with Bitcoin. I really don't think so. But if so, I'll be celebrating, and I hope you'll be celebrating too. But if you don't have time, you've got a day job. I have all day to research this stuff. If you don't have time, just play it safe. You know, I don't want to see you get burned. Just keep it in Bitcoin, keep it in Ethereum, okay? So, but I'm taking this opportunity to be a little bit more aggressive. My portfolio has increased about $70,000 over the last month, and that's not because of Bitcoin. You know, it's not because of Bitcoin. Because if it was just Bitcoin, my portfolio would have increased by less than $10,000 probably. No, that's not true. But it wouldn't have increased by much. But it's because I'm being more aggressive right now that I'm seeing these returns, and I expect that to stay the same. You know, I'm calling for a peak of this cycle sometime around September and October, and that for other people that seems like it's early. Other people are saying it's going to be like January of 2022. I just don't believe that. So over these next few months, what I'm saying is I feel like I have the freedom to take more risks right now. And then sometime around July or August, I'm going to be ultra conservative and maybe be transitioning a lot of this back to Bitcoin and, dare I say, even stable coins, and get some 30% returns on stable coins. Because where will I be at that time? You know, if I could get $500,000 into stable coins and get 30% returns, which I can right now, that's $150,000 in yields a year. I'll take it, you know? So I'm rolling around in my head as to what to do, and I'd love to hear your thoughts. What are your moves now? Where do you think Bitcoin's going to be? What's the altcoin that's you think is poised to outperform Bitcoin, essentially, to give you phenomenal returns? I'd love to hear all of that. So thank you again for joining me for another video. Like and subscribe to the channel if you haven't already. I will most certainly be seeing you in another video. Peace.